the public markets and the flood. Is Uber our Noah's Ark? Back to the future, trading day after Uber's IPO. Looking back, what are some of the things this chart tells us? Amazon was a 25-year-old company that went public 3 years after its founding. Google was a 21-year-old company that went public 6 years after its founding. Facebook was a 15-year-old company that went public 8 years after its founding. Uber was a 10-year-old company that went public 10 years after its founding. Annualized revenue comparison on date of each company's IPO. 3 years after its founding, Amazon went public with annualized revenue of about $17 million. On May 13th, 2019, 25 years after its founding, Amazon had $241.55 billion in annualized revenue. 6 years after its founding, Google went public with annualized revenue of about $2.7 billion. On May 13th, 2019, 21 years after its founding, Google had $145.36 billion in annualized revenue. 8 years after its founding, Facebook went public with annualized revenue of about $5 billion. On May 13th, 2019, 15 years after its founding, Facebook had $60.31 billion in annualized revenue. 10 years after its founding, Uber went public with annualized revenue of about $50 billion. On May 13th, 2019, 10 years after its founding, Uber had $50 billion in annualized revenue. What are some of the lessons here? The earlier a company goes public, the greater the potential for a massive upside. The greater the annualized revenue of a company before going public, the lower the growth rate after, in terms of market cap and/or annualized revenue. Uber is selling itself to the public as the next Amazon. To believe this, we need to extrapolate our minds into believing that in a 25-year lifespan, 15 years from now, Uber would have grown 204,777% in market cap, or 1,420,753% in annualized revenue. In this case, we might as well believe that there will be a flood and it will destroy the entire world, leaving only Uber as our Noah's Ark. At such a time, where will the riders to keep Uber, and Lyft for that matter, at the lofty valuations you as late investors are being lured into believing now? Based on what Uber and Lyft's early investors and supporters are saying, we might as well believe that there are only 2 national airlines in the USA markets. Therefore, there should be no others, right? Oh, but wait, there are other national airlines in the USA markets, aren't there? Therefore, it is conceivable that the transport network company on-demand marketplace is not confined to a duopoly. As consumers of and investors in the on-demand transport marketplace, we should ensure we have and support choices. Choices are good, and this is what markets are about. They are not the only 2 in the market to serve us as consumers or provide you as investors with realistic returns on investments. As consumers, we book our flights in advance. Why shouldn't we do the same for our ground transportation, for all our scheduled events and/or travels? As investors, you might have been late to the table with Uber and/or Lyft, but you are not late to the dinner. Zypps is a marketplace choice you have. This vlog is written and produced by Dr. Michael Treasure.